Hey everybody, this is Brian Shannon speaking from AlphaTrends.net. Today's Friday, the 27th of September, 2013. Let's go ahead and take a look at this market. We had kind of mixed results. We were looking for a pullback in the market overall, and the S&P 500 did pull back 1%. The NASDAQ was up ever so slightly, and the Russell 2000 just barely negative here on the week. Semiconductors lost 3/4 of a percentage point, and they are below that $40 level, so we're talking about that. But worst hit really of the groups that we follow closely was the financials, which are down 1.8%. Obviously, we're still in an uptrend. Year to date, we're up 22.3%. Here's our weekly chart of the S&P 500. Here's our weekly chart of the financials. So each candle that is representing 1 week. Let's take a closer look at the action, though. The S&P 500 will look at a 30-minute time frame, and that means each candle here is 30 minutes. This is looking at 30 days worth of data. What we're talking about here this past week was the fact that we were below a declining 5-day moving average, and as we're below a declining 5-day moving average, the intermediate term trend should be considered guilty till proven innocent. That is, we want to see the market get back above that 5-day moving average, the 5-day moving average to start to flatten out, and then we move beyond. Really next week we're going to have to overtake the 170 to 170 and a half to really feel as though this uptrend will be resuming itself. So you can see we've come down to the 20-day moving average. We've got the 50-day just below us here. If you look at the bottom left corner here where my pointer is, you can see that the 50-day moving average is at 168.20. So perhaps next week we pull back a little bit further and test that. We've also been observing the Fibonacci from the lows here that we saw from this move basically, and a 50% retracement will get us down to 169.30, so 68.30 rather, and then we take a look at the volume weighted average price. That's this trend line here from the lows in August through today's close. You can see that comes in right at about 169 and a half as well. So I'm sorry, 68 and a half. So 168 and a half. You know, if we undercut that 50-day moving average down towards 168 and a half, does seem like a reasonable level where this market could pull back to, perhaps even a little bit deeper down and close back into this gap area once again. So we're in pullback mode in the S&P 500, and we want to just treat it very cautiously, go on a stock by stock basis. We can't ignore individual stock movers because there are some great movers, and we'll talk about some of those. The NASDAQ, though, it really stayed within that range that we had seen from last week. So basically 78.50 is the key level that we were talking about, up towards 79.50 to 79.75. This is our band of resistance. This has been our little bit of a band of support recently. We are holding above the 5-day moving average. So it's interesting that the S&P is as weak as it is, but the NASDAQ continues to hold up. We have had a very nice run here, and we're so far digesting it through time. This is from the August lows as well. If we take a look here, where the S&P 500 had retraced a little bit more than 38.2%, you can see a 38.2% retracement in this market would get us down towards 78, and we're obviously not there. So you look at the daily time frame, it just looks like a nice healthy consolidation, but we will be in danger intermediate term if we break below 78.50, and the semiconductors give us a little bit of reason for caution, and we'll talk about that again here shortly. But as long as we remain above 78 and a quarter to 78.50, this band of support, then I think that the benefit of the doubt still goes to the buyers. So far, we're just correcting through time. We did break this trend line, but as I always say, breaking of a trend line just means that the rate of ascent has slowed. It doesn't mean we're going to pull back deeper. We have to give the market's taking time to digest the gains, and a time correction is more bullish than a price correction. So because it shows that there's still bidders in the market holding this up. But if we lose those bids, then we have to get very cautious because a deeper pullback would seem likely, and perhaps down towards this prior resistance at 77 would make sense, and that's where we have about the 50% retracement as well. Russell 2000 again was what was that? That was slightly. Where did my chart go? The Russell 2000 was down ever so slightly, basically unchanged is the way I view that. And the key level in here going forward to next week is going to be 106 to 106 and a quarter. This is our band of support that we want to see hold. We've got this trend line here that kind of looks something like this if we take it off of the low from August to this low as well. And so if we break below and hold below that 106 level, then we want to look at the retracement levels and say, the pullback to 104.75, a 38% retracement, would definitely seem likely and reasonable. That's down towards this level right in here. So the key is going to be for this market to hold up above support. If it does that, then it's foolish to get short the market. The one cautionary from the market is the semiconductors. Semiconductors, as I've been pointing out, they led the recovery as we got back above $38 a share. Then the NASDAQ and the S&P 500 followed the semiconductors, and now we've seen that they've had a great run beyond that 38 level. And what we were talking about this week was the key area of support that we wanted to see hold, really between $40 and $40.15, I think is the key level. We broke this uptrend line in here, and you can draw that uptrend a number of different ways. But the bottom line is, we broke it, and what best represents the essence of trend, perhaps this trend line. We can see that that's broken. Someone else might draw it this way. The point isn't that it's a scientific tool that you have to sell short below a trend line break or whatever it is. What's more important is the support level, that if that support level fails like it did in here and then holds as resistance, then it's more likely that we're going to see a deeper correction. So we have to figure if this semiconductor market does correct deeper, perhaps down towards 39 and a dime, then I think it's going to have a negative effect on that NASDAQ and drag the NASDAQ down below 78.50. So keep a close eye on the semiconductors next week. It's not, we're below the 40 level, but don't take that number so literally. What we want to see is that, here's been this band of support basically between 40 and 40.15. If we stay below that, then we've got a problem. We do have a declining 5-day moving average, so it's guilty till proven innocent. What would change my cautious look on the semiconductors going in next week is if we get back above and hold above $40.30, then this would be what I would consider to be a little bit of a failed breakdown, and perhaps the semiconductors can continue to march forward and make new highs. The financials, as we know, had the deeper pullback this week. We are below a declining 50-day moving average. We have seen the retracement in here deeper than the other markets. So we have in here off of these lows from August, we have seen just about a 61.8% retracement. So and they do remain below the declining 5-day moving average. So the financials are clearly putting pressure on the S&P 500. If this market can get back above probably $20.30 and hold above, then perhaps we're going to correct a little bit more through time in the financials. One thing to keep an eye on is that this is looking like a Head and Shoulders top, and Head and Shoulders does not have to be straight neckline like you see in a lot of books. Instead, it can have that upward sloping neckline or a down sloping neckline. Either way, a pullback down towards just the neckline would be another 35 cents lower from here, so be aware of that. And so for next week, we have to go into the market being a bit cautious here to start out. Shares of Apple were up a little bit this week, and that occurred really from that gap higher on Monday. They spent the rest of the week just pulling back, holding that 20-day moving average. And on the 30-minute time frame, we have a lot of indecision in here. So I don't see any real advantage to being involved in Apple right now. However, if we get back above these highs right in here, I think it would start to bode well for the stock. So, keep an alert maybe at about 485 or so. Some of the other stocks that we were involved in this week, and I'd spoken about these on the blog, I had posted a video midweek with some ideas on it. Triple D, we got involved in this one last week twice, and then again this week. What we had done in here was we got involved in it at $54.36 on this day, and we took half of our position off with an 87-cent profit. So we're at 86 cents profit, and then we had been raising our stop first under here, and then today we had our stop just at this level. So on the balance of the position, we got stopped out with a profit of 57 cents, so 86 and 57. Now that's not what we're involved in Triple D for. We're involved in Triple D because it's got a big short position. It's up near all-time highs and seems like it could get squeezed pretty hard. I've been saying it, it looks like it could get Tesla'd. In other words, that the shorts could really be in for a lot of trouble. However, when the pattern of higher highs on the higher lows on the intermediate term breaks, I think it's prudent to move to the sidelines, take the profits that's available to you, and sit on the sidelines and wait for a better scenario to set up. Another stock that I would mention as a potential short squeeze candidate was Soda. And Soda was, as you recall, we were looking at it as this resistance seemingly was holding as support, but I said we don't want to buy it yet because we have that declining 5-day moving average. What we wanted to see was something like this. So instead the stock broke support and there was never a reason to get involved in Soda. So again, what I try to do is bring Alpha Trend subscribers ideas that are going to make them money and bring them ideas that are going to not cost the money. So not getting involved where a lot of people I saw were buying the stock in this area because they thought it was at support, but by not getting involved, we saved the losses, and now we have that a fresh mental outlook on Soda that we can get involved in that one if it heals. Right now, it doesn't look like it's going to continue to get better. Here's one that we got involved in on some strength, this TROX. We got involved, actually, I think it was above this level right here, and sold half of it right up in there. Got stopped out of the balance yesterday on Thursday for a very small loss. So even though we got stopped out of the second half for a loss, because we had taken a larger profit and raised our stop on Thursday, we still got out of that one with a position. What was really working well this week, and we have some positions in, is the Chinese solars. HSOL, we got involved at 377, and this one it's got a great looking weekly chart. I think it can still go crazy from here. It held up very nicely today, and we've got our stop just underneath this level. So we've gotten involved at this area right here 2 days ago, and also involved in JASO, which has had a great week. And these, the Yingli, and Yingli, actually, it's kind of interesting because I think I mentioned this in the blog that in the video midweek, that Yingli, the way that it looked here was very similar to a stock that we were involved in last week, which was EGLE. It had that same type of little flag pattern. So Yingli, I'm not looking for Yingli to do that type of move, but you never know. It's got a great looking weekly chart. Some of these Chinese stocks are going crazy. We're involved in TSL as well, and that one broke from a similar type of pennant. One that people look at this WLT, for some reason they're still heavily involved in it and emotionally invested, it seems. There's a big short position in this, and every time it gets a little bit of a blip, people are saying it's a short squeeze, it's a short squeeze. But the fact is, WLT is in a primary downtrend. The shorts are in control. They have no reason to get squeezed in here. They are in control of the primary trend when we look at the market structurally. What's different is the people who are trying to bottom fish in JCP. I see it over and over again, that hey, now that Ackman's out, maybe it's ready to bounce. But this stock has been in a downtrend for years. Ask yourself, when's the last time you went into one of the JCPenney stores? Ask your neighbors, who's been into a JCPenney store recently? That's really, that's Peter Lynch. That's irrelevant to the fact that we have a declining 50-day moving average. The stock is guilty till proven innocent. Stay away. Now, this is what short sellers are looking for. What we're looking for is for short squeezes. One that came as a surprise to a lot of shorts this week was in Mako, this Mako Surgical. 28, I think, percent of the stock was the float of the stock was short. So on Wednesday, they received a takeover offer, and the stock went from 16 to 29. So up, what was that, 70% or so overnight. That's a short seller's worst nightmare. So there's a lot of risk still in this market. If you're shorting stocks that are in an uptrend, this is basically what can happen, what often happens, and being involved in other risky things such as biotechs. There's been a lot of very bullish biotech action recently, and I always caution people, be very careful with these biotechs. They are extremely dangerous. You can wake up any day and see this happen to any one of those biotech stocks that's going crazy. So I always suggest that you either day trade the biotechs or you trade them with options where your your losses are extremely defined, or they're not extremely ending the video here in a moment, where the losses are defined. So anyways, thanks for tuning in. Hope you have a good weekend, and take a free trial if you haven't. A lot of people are benefiting and sending along good feedback about the Alpha Trend subscription. I've made a little bit of changes recently, and I invite you to come take a look. Thanks.